Hello and welcome to this special edition episode of InFocus. I'm Candis Fitch, Portfolio Manager at TriCert Investment Counsel, joined today by fellow Portfolio Manager and our Chief Investment Officer, Brian Durno. Nice to chat with you, Brian.
Hi, Candis. Thanks for having me.
Given recent events, could you give us a quick recap of what's been going on?
Sure. Yeah, it was quite an eventful weekend. February 28th, I guess that was Saturday morning, the joint U.S. and Israeli operation, they are labeling Operation Epic Fury, targeted leadership in Iran, which was, there was some buildup of military presence in that area, but I guess I don't think many people would have fully thought it would have happened as quick as it did. Anyways, March 2nd, of course, today's the first day of the markets being open since that event, and the region is in a state of obviously high friction. Iran's launched retaliatory attacks against even some of their, let's say, neighborly friendly states, traditionally friendly states, across the Gulf. So we've seen disruptions in the Strait of Hormuz, which is probably the most material economic component of all this, outside of the human suffering and some of the softer, more human elements of this. And then, of course, the impacts on energy markets.
Right. And given that, I know at the time of recording, markets haven't even been open for a full day yet, but how has that impacted so far?
Yeah, well, so far, this is one of the things that portfolio managers do almost instinctively, after they've been around a long time, is you start to wonder what the market is pricing in versus what facts you have on the ground and comparing those two things. But in the short term, it looks like the market's pricing in more of a brief and kind of contained, orderly transition, and Trump's messaging about, 3-4 weeks is comforting the market. Not that he's going to be right or that claim will be true, but the market, has to have a position. It's a collective bunch of people pricing things in the market every day, and that's what it seems like is being priced in currently. So we'll be watching for any evidence to the contrary of that. So you can kind of call ourselves, I kind of think of the word as an active observation state. When something like this happens, we don't want to make reactive trades or massive strategic adjustments because of a headline like this. But we definitely want to observe the markets for any opportunities for dislocations between fundamentals and valuations.
What does this mean for our clients and portfolios going forward?
Yeah, I have a bunch of things that popped in my head when we were thinking about this topic. One thing that might not be evidently clear, and it certainly won't make headlines when there's such, let's say, negativity in the press, but we've entered this current piece of volatility from quite a position of strength. So the corporate profit, let's say the bottom-up fundamentals of companies, let's just say the U.S. as a proxy, but it's pretty much true in Canada and Europe as well. But we've entered this period of volatility from a position of strength. So corporate profits in the quarter that just reported, literally 97% of the companies have reported, that just finished, the growth rate in corporate profits there was 14%. Year over year. So that's let's say a healthy starting point. In our core picks, which is our collection of securities that we populate portfolios with, the growth rate was 11%. So the difference there is mostly the Mag 7, if you're wondering. And GDP's been, reasonably strong. Inflation's been sort of heading the right way, at least. So the strength going in is certainly helping cushion the blow. Obviously, the uncertainty of the future is part of what we build into portfolios. I think these are the most important messages when I think about clients, is that we don't want to position things after an event. You want to have your portfolio positioned ahead of events that are unpredictable. So how do you do that? Is one, you don't overextend yourself into one point of view that requires your bet on an outcome being right. So you want to stay, let's say, broadly diversified across let's say all the components of the economy, especially the value creating components of the economy where we concentrate our attention. And you don't want to be dependent on that one narrow payoff. They of course make lovely headlines and they get, great runs when they're right. But often you might find you only see that fellow on TV when he gets it right. You don't see him when he gets it wrong. And we didn't, obviously, when we build our portfolios and the construction philosophy, we don't assume a perfect geopolitical environment. We assume lots of uncertainty and lots of chaos and disruption in markets, not only from geopolitical context, but also bottom-up competitive dynamics between the companies that compete in the markets. So we sort of believe at the beginning that that's going to be the truth of how the future will play out. So that really helps us stay diversified and disciplined through periods like this.
Perfect. I do always love to remind clients that we build these portfolios to be resilient through these times.
Yeah, I might add one small piece that you may have seen some of the portfolio managers talk about, but the last couple of years we added government bonds into the income producing component of our portfolios. And it's for periods like this when things, let's call them black swans or fat tails or unusual events that don't happen every day. They're actually never predictable ahead of time when they come, but you're usually glad that you have some defensiveness in your portfolio when it happens. And of course, the core picks being large cap, dividend paying, strong balance sheets, that really does help protect the portfolio in periods like this.
Perfect. Well, thank you, Brian, for your confidence and reassurance during volatile times like this. Of course, if anybody has further questions, please feel free to reach out to your TriCert portfolio manager, and we'll chat with you again soon. This podcast is provided for informational purposes only and does not constitute investment, tax, or legal advice. Any investments and/or strategies discussed may not be suitable for all listeners and should be considered based on individual investment objectives and circumstances. Listeners are encouraged to seek advice from qualified professionals before making any financial or other decisions based on the content of this podcast.